Alright, so I figured I'd just, got a little bit of time watching, the ES right now, so I figured I'd just kind of make a video and just share some thoughts over the day. So, on the open, this happens a lot. By the way, today's rollover day, so as you can see, the Emini and the actual ES are going to look different. But right now, I've been trading primarily the U contract or the September contract of the E-mini, and I'll probably switch to the December contract tomorrow because it more than likely will have more volume. As you can see right now, we barely have 1,000 contracts being traded per bar, and that's just not normal. Well, it's normal for rollover day, but the September contract probably has 2 or 3 or 4,000 traded on this bar, maybe more than that. So anyways, looking at the day, if we just kind of zoom out, obviously the prices and all that are different. We tested the high of last week right here over right here. I think the high of last week's like right here. So we're kind of, well, you just keep it real simple. Been trading range. We've had trading range days for the past, 6 days or so, and we're probably gonna have a trading range day today as well. So, anyways, if we look at the open, we gap down and we're at yesterday's low right here. And I think one of the big things is you always, whenever you're close to an extreme, such as yesterday's low, yesterday's high, you've always got to be thinking about a failed breakout of the low and a move up. When you see bar one and you look at it, this bar one triggered on the December contract, but if you look, you can see it did not trigger on this contract. I've got more lines just because I'm actually trading the September contract. But anyways, but not a great buy. It's a doji, pretty tight. It's basically a spike down. We're by the moving average, so better to wait. Then we got a bear breakout, but again, probably buyers below this bar. And then we got 845. 845 would have been a decent buy, but as you can see, it did not trigger. I guess my real thoughts are bulls bought this low, scalped out at the open of the day. And the reason I think that just makes sense. It's a quick 1-point scalp. Or, if you buy this low, 7150. Yeah, so, limit order trading. Then we got a second entry short. And this happens all the time. You get a second entry short at the bottom of a trading range. Low probability short. It's fairly big risk compared to, for taking that kind of trade, because you want low risk because it's a low probability bet, so you want low risk and bigger reward. If I would have taken this, I would have probably gotten out. I say that. I might have gotten out above the entry bar here. More likely than not, I definitely would have gotten out above this bar. 3 pushes down, 1, 2, 3. It's the second failed breakout attempt of yesterday's low. It failed. The bears just aren't doing what they need to do, so it's a reasonable buy. Here, if not here. And you can see a lot of bears gave up on this bar. Look what happened at this close. Bears will sell this close, scaling higher. Some scalped out. Some, if the bears sold this close and did not get out on this bar right here, what do they do here? Never let them out. So, you got to be aware of that. And then, of course, we have to be thinking about the common, some sort of measured move from the lows to the open projecting up. It looks like today's kind of hard. It's not really clear. This happens sometimes. Sometimes you don't get a clear measured move from the low to the open projecting up, and that's okay. Really, all that matters is just be aware when you see this right here. The open of the day may be trying to you know, the market may be trying to put the open of the day in the middle of the day, creating a doji. It's usually what happens, and because of that, for the rest of the day, we're probably going to have.
What about a stop entry?
Yeah, I had to pause the video for a second. I kind of forgot what I was saying, but yeah, so we're trying to close. It looks like the open of the day, somewhere around here, is being projected close to the middle. So when we get this, you have to be thinking about, number one, strong bull breakout, and you have to be thinking about, are we going to get a really strong breakout above the open of the day, the high of the day, or something weak and disappointing? If it's disappointing, it's probably going to be a trading range day. The bulls would like something like this, and then some sort of test up to the high of the day. But you've got to ask yourself, trading range day, bulls will probably be disappointed. We'll probably, if this is a trading range, we'll probably swing up for a few hours, swing down for a few hours. And look at this bar right here. We closed, let's see, the close was 75, the high was 475. We closed one tick above the high of the day over here. Ask yourself, is that typical of a trend, or does this look confusing? Is this a pullback from this sell-off or a failed breakout of the high of the day? It's not that clear. So confusion, hallmark of the trading range. So it's probably trading range day. Do always and bulls get out here? That's kind of tricky. Arguably second leg up. I think two things. I think they can get out, but if they do, I think they got to get back in. It's tricky because second leg's up is likely, but I think it's probably okay to stay long in hindsight, just because, and just see maybe if you get 3 bars down, or if you get 3 bars that look like this, 1, 2, and then another bear bar that these sides get out. But I think it's okay to stay long. Then we get this bar. This bar tells you a lot. So many bulls bought above this bar at 450, and they scalped out for 1 point, and you had buy the closed bulls, buy up here, scan lower, scalp out. So this just doesn't look that strong. You have to think, okay, maybe we're forming some sort of wedge top. And that's in fact what we did. 3 pushes up. Really doesn't matter if you draw the lines perfectly. 1, 2, 3. It's just 3 pushes. Computers will see it that way. So maybe 2 legs sideways to down. And you can see. Also, another thing I want to point out, similar to over here and today, trading range days very often they go above an extreme like here. They go above an extreme like this, and they immediately sell off. They fall below an extreme, such as over here. They fall below the low of the day and immediately go up. They go above the high of the day and sell off. Go above the high of the day, sell off. That's a sign of a trading range, So you have to be careful about that. We've had 2 clear legs up, So yeah, and when that happens, normally trading range day. Here, it's basically a bear breakout. So you can see it as a bear breakout, disappointing pullback, and then a channel. So 3 pushes down, 1, 2, 3. Arguably kind of a trim channel overshoot at the low of the day. Really, it doesn't matter. I mean, if you just look, when you're in this, you say, okay, we have a, is this a buy setup, or I'm just going to make these green. Maybe that'll be easier to see. I prefer black and white candlesticks. It's just, I've just used that for so long now. I kind of like it more, but sometimes it's hard to see, and we'll make sure it's very clear for everyone. When you get something like this, you always got to think, okay, 3 pushes up, wedge, 1, 2, 3. Probably 2 legs down, so leg 1, pull back, some sort of leg 2, and so forcing you to buy fairly high up, and then we're selling off. It's now be a double bottom, but again, why 3 bars down? You have to be thinking trading range day. Trading ranges usually fall further than you want. when you're looking to buy, and they go up further than you want when you're looking to sell. So again, we'll probably go a little more down. You can see the bears are trying to break out to the downside, but kind of forming a tight channel. But again, not that strong. This looks like some sort of bull flag. But the stops are, if you're buying anywhere in here, you probably need to stop down here, because if you use a stop right here, you may get stopped out. And then as you can see, we're selling off, going further down. Now we're getting a very tight channel. You got to think, okay, you always have to be aware of the possibility of a bear breakout and just a very fast move. But you've got to also be thinking, well, this is a trading range day. We're right at yesterday's low again. We're trying to break out below these lows. We just broke out below this low. And, maybe the bears need one more good bear bar before I'll sell. And look what happened. Very disappointing. So, probably this makes me think we never really went always in short. I say that because usually when the market's confusing, such as a trading range, it goes further down than you want and stays always in long, or if it's always in short, it goes further up than what you prefer. And usually when something like this happens, it's just usually, if you thought this was always in short, it's best to change your mind when you see this, especially when at a place of support where the bears needed some sort of bear breakout and they didn't get it. So disappointing. We're probably going to have a few legs sideways to up. So is this 2 legs? It's possible, but I think this is probably 1 leg. And it'll probably be a larger leg. And that leads us to that so far at current price. 3 pushes up, 1, 2, 3. This red line's the open of the day. I really think I wouldn't want to buy up here. I'd want to buy some sort of pullback. This looks too much like this, and it's just really dangerous. You got to ask yourself, okay, if I buy right now, where's my stop go? Do I put it right here? Well, the issue with putting it right there is it's exactly at a 50% pullback, so it's a reasonable magnet for price to go to. And I got to think about risk reward. So if I buy here for my stop right here, 1 times my risk takes me all the way to the high of the day. Well, that's probably not a 60% bet, so I'll probably need 2 times my risk, and that would put me somewhere initially up here. Well, what about the stop down here? That's probably better, but still I probably need to scale in. And why do that if there's a very reasonable chance I'll be able to buy lower? So I'd wait to buy a pullback. I guess it's always possible that we get something like this. So a large leg 1, leg 2, and the close at the low. And interestingly enough, that's kind of interesting. So basically it would be take you right at, it'd make equal kind of a stairs pattern. So bear breakout. So we got a bear breakout here below this low. We make it an equal bear breakout. But again, that's probably not going to happen, so I don't want to go too far in that. A few other interesting markets today, especially, I'd say bonds is probably the most interesting. If you've been in the room today, you've heard Al talk about it. So monthly chart, we've had consecutive buy climaxes, arguably a spike, pull back 3 pushes up a channel, maybe a bull breakout of the channel here, second leg up. So maybe here's another spike, 1, 2, 3, 1, 2, 3. So just trying to draw channels here, 1, 2, 3, 1, 2, 3, 3 pushes up again. Here's another 1 push, 2 pushes 3, 1, 2, 3. It's very climactic. So we may be trying to put in the top, and if you think about it, that actually makes a lot of sense, because if we are putting in a top, we would probably, start testing lower highs and test the start of the channel. So where's an obvious test of the channel? Well, maybe somewhere down here. Weekly chart, spike starting to form a channel. You got a gap here. What else? So I think it's reasonable to sell, put a stop up here. And yeah, if you heard Al talked about this in the room, and it makes sense. Daily chart, we're closing below, trying to close below the last every. Yeah, so if we manage to close below all these prior days, you'll have a lot of bulls that are trapped and they'll want to get out, and that could lead to some sort of measure move, and no surprise it would take you down this buy climax. So I think we'll get to here for sure, more likely than not. So if you had to ask yourself in terms of probability, what's the odds, measure move up, or a measure move down? Probably say measure move down. This is pretty climactic, and very often when you get, this is the Brexit, very often when you get a climax, a buy climax, at the end of the move, sometimes you get 2 or 3 small, pushes up. So arguably a spike, 3 pushes up, or a spike and a second leg up. That's really how I'd see it. And then you start testing down. So I think we're gonna get back into here. Kind of a possible final flag. So yeah, and that's really my thoughts on this. And that's pretty much, gold. Once you see this, 3-bar spike, if you're quick and you see it in time, just sell the close, stop up here, go for a measure move down. When you look at this on a 5-minute chart, it looks like this. Here at this point, arguably forming lower highs, lower lows, but at some point you've got to look at this and see, okay, a lot of bear bars, this bar didn't even trigger, bear breakout, probably second leg down. So again, sell this close, put your stop up here, just hold on, just kind of jump off the high dive, if you will. And you can see, even if you sold the worst place, even if you sold this close, well, that's kind of obvious. I'll say this close. Even if you sold down here and just held, you'd still be at a small profit. You'd still have time to get out. So trends don't reverse on a dime. I think what'll be interesting, well, it'd be interesting to see if we get some sort of measure move down from these bodies projecting down to here. And we might. I think it's probably reasonable. You can probably sell, put a stop up here. So, but we'll see what happens. So yeah, that's pretty much all I have. Hope this helps, and let me know if you have any questions.